Affirm is one of the stocks that's been caught up in this selling frenzy as a result of the announcement of tariffs on the United States trading partners by President Donald Trump. Of course, investors are now interested in finding out if Affirm stock is a buy or if this is a stock that needs to be sold given the change in economic circumstances. So I'll talk about how a firm's business could be impacted as a result of the tariffs. I'll share with you my valuation model for a firm, my proprietary valuation model, the intrinsic value per share calculation, and I'll look at the valuation on a forward price to earnings and answer if I think a firm is a buy at these current prices, accounting for the elevated risk.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so my intrinsic value calculation for a firm stock has it at $77 a share. That's more than double the current market price of $36 now. The change in price today was down over 8%. A firm stock, the 52-week high was $82 and the 52-week low was $22. So it's on the lower end of its 52-week trading range, which is understandable given the elevated risks. So let me talk about how a firm's business can be impacted here. The most negative impact first. Since a firm deals with buy now, pay later loans and lending, the biggest negative impact could be as a result of defaults on those loans. And the reason why people could default on those loans is because of a reduction in economic activity as a result of the tariffs, which then leads to rising unemployment. And then if people don't have jobs, that increases the risks of default. So that's the number one risk that is now increased with Affirm. Before these tariffs were announced, I had the probability of recession forecasted for the United States for 2025 at less than 20%. Now, following the announcements of tariffs, I've increased the probability of recession in my forecast at least 30, 35, maybe closer to 40% now. And that's because the tariffs are initially going to create a higher cost of goods for businesses, and businesses are going to need to make choices on how they deal with those higher costs. Most businesses don't have high enough margins to just absorb the higher cost. So they're going to need to pass along some of those higher costs to customers. And customers, when they see higher prices, they're going to likely buy fewer things. So when customers buy fewer things, then businesses are going to need fewer people because they're not going to need to create as many things. And they're going to let go of people, or they're not going to hire as many people. And that's going to create a slowdown in economic activity. And then if you lose your job, you have to make a choice. What are you going to pay? One of the first payments you'll miss is your buy now, pay later type of things and personal loans, things of that nature. You'll probably still make your car payment and mortgage payment because you don't want to get evicted or you don't want to get your car repossessed. So Affirm is right in the epicenter of the impact of negative macroeconomic consequences as a result of tariffs. Now, another thing that will likely happen is Affirm recently announced deals with third-party lenders who were buying up the loans that Affirm was originating. So before we even start to see any defaults, the market to purchase these loans, these buy now, pay later loans, will likely start to dry up. Lenders will tighten their belts in the types of things that they want to lend into, at least initially, as they observe how the economy reacts to these tariff announcements. So there won't be buyers for these loans that a firm is originating. The buyers will dry up. And so a firm will need to make a choice. Does it hold more of these loans on its balance sheet, or does it make fewer of these types of loans? Does it restrict even more the credit that it extends? And so does it restrict the amount of customer acquisition, the amount of revenue it generates, the fees, et cetera, et cetera? So it's directly impacted negatively in that way. In another way, there could be some positive side effects for a firm's business in that the price of everything is likely to go up. There's going to be an increase in price pressure. So things like iPhones and Sony PlayStation 5 consoles, the prices for those things are likely to increase. And so if people are paying higher prices for these things, they're borrowing more. So the total amount borrowed or the total amount under contract will likely increase. Now, I don't think that increase will be enough to offset the declines in activity, the declines in customer acquisition, and the declines in the ability to originate these buy now, pay later loans. But it will somewhat offset the decline. So that is one positive aspect, the counter to the negative. But I think the negative aspect will significantly outweigh the positive aspect for a firm's business. So certainly, I think there's going to be negative consequences to a firm's business. Then it becomes a choice for investors to say to themselves, okay, so we now have a business that's going to be smaller than it was before the announcements. It's not going to generate as much new originations. It's not going to be able to sell those, and customers are likely to pull back on activity. From that point onward, the company can continue on its trajectory, adjusting to the new normal, because every business will need to adjust to the new normal. Economies will not stop. They'll keep moving forward. They'll keep finding adjustments, and they'll recalibrate and adjust to the new circumstances. The good thing is that a firm's business is significantly undervalued when I measure it on the intrinsic value. And also when you measure it on a forward price to earnings basis, you can now get a firm stock at a forward PE of 45, which is near the lowest it's been, going all the way back to 2024. So you're getting this business at a valuation you weren't able to get it at before. So you're getting a business at a lower price with higher risk. And still, I think it's worthwhile for long-term investors because the higher risk is offset by the lower price. I would have preferred the business before the announcements of the tariffs. I don't think the price decline has overreacted to the news. I think the news was sufficiently negative to justify the price declines here. I would have preferred the business before the tariff announcements, but at these lower valuations, I still like this for long-term investors. I think the risk versus reward is worthwhile, and I do believe Affirm stock is a buying opportunity at these lower prices. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.